Hi everyone, hope you're all doing well. Today I'm just going to do 3 quick updates for you guys. I'm going to talk about JD Sports, which is a stock I own, Hims and Hers, which is a stock I own, and Ehang, which is a stock I own as well, which is a bit more of a spec play. And yeah, we'll do 3 quick updates on these guys. I wanted to kind of do a video on them all, but I thought let's stick it in a video together and speak about them for like 3 or 4 minutes. I know I said I'd get a PayPal video to you guys at some point. I'll do that next week for you guys, hopefully on probably Monday or Tuesday. I'll get that video for you guys that wanted the PayPal video. And as well as that, a good day in the market. It's been a good week in the market. I think my portfolio's done quite well this week. I think I'm up around about 3% this week. And obviously we've had the Fed, Jerome Powell's come out and basically said, yeah, we're going to start cutting rates going forward. I mean, the market seems to love it, but how many times has it started pricing in, oh, there's a cut coming, there's another cut coming. I don't know, by the time we actually get the cut, the market's probably going to go down and go, is that all we get? I thought we were getting like a 50 basis points cut. So it looks like the market's getting very carried away on that news anyway, but that's the subject for another day. Let's get talking about these 3 stocks here today. Now, just a quick shout out, if you are free this weekend and want to watch some more content on the Patreon, we post 2 exclusive videos a week on there, and we have just dropped a special Friday video on the Patreon or the Discord. You get both of them when you join the Patreon. With Matty. Matty joins us once again. It's around about 44 minutes video talking to Matty, and we talk about a lot of stocks on there like Card Factory, Inmo, DraftKings, Flutter, and plenty more. So if you are on the Patreon, do go check that out. If you aren't on Patreon, you can join with a link in the description, £5 a month. But getting on to the first one, JD Sports. Yeah, this has really woken up in the last kind of couple of days, weeks, obviously off the back of the trading update. I am having a little bit of a consider, maybe just take some profit off the table. We'll see what happens. If I do, I'll post it on the Patreon. But it is having a bit of a rally up at the moment. Yeah, 21% up in the last month. This week it's up 15%, which is a pretty good run, as you can see here. And JD Sports is a quality business. It's a stock that I started buying back in the COVID times. Stock did very well. Since then it had a bit of a pullback. You can see here the run up that it did go on. I was up over 100% on the position. I did take some profit off the table, and then it dipped again, and then it's rallied up again. And then recently it's had another dip back down, and it's starting to have a bit more of a pop up back here, and hopefully it goes on its rally, because I don't think this, I can't really get it out here, but it is actually lower than when it was before the COVID times, which is absolutely crazy, because if you actually look at how well the business did during that time frame, let's look at this past performance here. Let's go back a bit on Simple Wall Street. You can see here, look, I mean, just look at the growth story for the last kind of few years. Very good expansion into that US and EU market, and obviously a few dips in the profitability with acquisitions, the COVID times, but the profitability is really ramping up in the business now. You can see here we're doing around about 538 million. This next year we are expected to close at 661 million, and in another couple of months time 774 million profitability, which you start thinking about 2 years time, well, not even 2 years time, a year and a half time, if they do get around that 774 million profitability on a 7.4 billion market cap business, it's not bad, is it? And you know, you're getting a really good balance sheet here. You know, realistically, it's 4.5% debt to equity. They've only got 129 million in debt, so amazing balance sheet. Potential to maybe hike up that dividend a little bit as well going forward. We'll see what happens, but yeah, I really like JD Sports, and they obviously bought the Hibbett brand not too long ago, and that's actually closed. Maybe that's what's getting priced in a little bit more now on the share price, is that maybe the stock market's only just starting to price in that Hibbett acquisition, because it was a good acquisition in my opinion, and it was a significant amount, around about 1 billion. And if you actually look since about April time when they did buy Hibbett, the stock hasn't really, let's go back to April time, yeah, I mean the stock hasn't really gone up that much until the last couple of days, so maybe that's kind of what's getting priced in at the moment. But yeah, they came out with a trading update, and the trading update was really good in my opinion. 22nd of August, strong growth, 8.3% organic sales, so obviously with the likes of the acquisition, for example, and the expansion going in. But even so, the 2.4% like-for-like sales was still pretty good in my opinion. You look at something like a Nike, for example. I mean, you look at how much Nike is struggling during that time frame. Nike have negative growth, and JD is by far outgrowing them, and obviously a clear or more clear path on how they're going to keep growing as they expand into Europe and the US, and that's clear when you look at the growth numbers. This is very good compared to Nike. Obviously, you don't have the branding side of it, so it's going to be a cheaper valuation. But you know, if you're picking up at 14 times earnings on a forward basis, you're probably picking it at what, like 10 times forward earnings. It's not bad at all, is it? When you look at them sort of numbers, they said that they do expect to still be on their track to deliver their profit within their guidance. Really strong growth in America and Europe. The really weak part actually was the UK side of it. UK was a little bit weak. Stronger than the first quarter though, which is worth pointing out. So maybe bit more of a stronger economy there in the UK, or the consumer being a bit stronger in the UK. Did say that promotional activity was a little bit higher, so the gross margins do drop a little bit, but still not as bad as what it was, I think, in Q1. So yeah, JD Sports, really good rally. I think it's deserved, especially when you put in the Hibbett acquisition and the growth is coming in time when you're seeing stocks like Nike have really big amounts of weakness. But you're picking up a really good UK brand here. Good history of growing, continued growth, clear plan on how they're going to expand, great balance sheet, dividend that's going to keep on hiking up. Probably why there's been a lot of insiders kind of buying the stock in the last 12 months as well in that kind of £1 range, and it's starting to bounce up a little bit now. Yeah, I think that this, if they hit anywhere close to the numbers that they're forecast to do in the next kind of 2 or 3 years, I would expect JD Sports to easily start pushing up towards a £2 stock. Whether or not it's worth taking some off the table while we're still in this kind of economic tougher environment, and if it could get any worse, I don't know. But yeah, really good numbers from JD Sports there. Another one that I own is Ehang. So this is more of a spec play. So this is a high risk play that I've got a small amount of money in. I've had it for a few years now, and either this is going to go bankrupt, that's why it's a small amount of money, or it's a stock that will go on to 5x and 10x with the expansion plans they do have. Now these guys do passenger drones. I'll kind of play the video here in the background. So these drones here, there could potentially be taxis in busy cities, built up cities where you can go, you know, directly into a straight line where you go in. It could also be used for the likes of tourism, for example. Easy to get maybe emergency workers to certain places. There's a lot of places that these drones could potentially be used for in a lot of countries. Obviously they've got certification, so they can be actually used now, and because of that translated into a lot of their actual revenue numbers. If you look at some of the revenue numbers this time around, because they can sell a lot of big units, 619% year over year growth. Yeah, very good. They also, you know, you can look here, they delivered 49 units compared to the 5 units. Still not a bad balance sheet. Positive free cash flow as well from operations. There's still that risk element there because they are still losing money, but it is starting to improve, which is a good thing, and decent guidance as well. So yeah, they're starting to get the deals coming in that people are after buying some of these drones now, and it's exciting because we used to talk about a company that just had the product, but now we talk about a company that is actually starting to deliver bigger numbers on the financial point of view. And if the company starts moving a lot more into the profitable element, hopefully in the next kind of couple of years, the risk might even go away with it. And I look at the company now, I mean, it's it's just short of a 1 billion valuation here for a company that is maybe not doing big amounts of financials just yet, but that could really explode now they've got the certification. But I look at something like a Joby, for example, which is probably the closest rival, and they're trying to develop you know, these electric drones, passenger drones, and you know, these guys are still, you know, they haven't even got a certification, they haven't got a working product, and you know, they're still generating no revenue. And this is a company that is a no revenue company compared to Ehang, who actually have their products that's working, the certification you can see that's working, you can go one, are actually starting to be used a little bit now. And yet, you know, you look at Joby and it's a 3.6 billion market cap valuation. It's massively higher valued compared to where Ehang's valuation. And I mean, yeah, sure, the difference is Joby is a US company. Yeah, you can say that, but you know, how much do you value a US company more than a Chinese company when the Chinese company actually has the one that has the working products that is starting to have sales? I mean, come on, guys. Like, surely Ehang should at least be worth the equivalent to what Joby's worth. And yeah, it's still a little bit frustrating because when Ehang actually got the certification, the stock actually went up a good amount, as you can see, and then it kind of nearly gave it all back, and it was like, how have we gone back to the same share price when we are in a total different league from where we were at the start of the year. We've got the certification now. I don't know. So yeah, it'll be interesting to see where this one goes in the next kind of few years. But very good news for it. But I'd still say it's still a high risk stock, I would say. And the last one is Hims and Hers. We did have some news with Hims and Hers, nothing to do with the company, but what did happen is an analyst came out, which was Needham, came out and started the coverage with a buy. Don't normally care too much about analysts and analyst price targets. It's nothing that I'm really interested. They can change the price targets all the time. If the stock is hot, then they start hiking up the price targets. When it's low, they start bringing the price targets down. They're basically trying to get what it is in 12 months time. And for someone that's a long-term investor like me for 4 or 5 years, I'm not really bothered where it's going to be in 12 months time. And a lot of analysts are just chasing the share price half the time. But the difference is with Needham is the analyst that actually gave this price target is actually a pretty decent analyst. If you do go into tip ranks, you can see here he's one of the highest rated analysts actually on the tip rank site. He has 4.5 stars, which is normally a sign of that he does get a lot of predictions right, which is really good. On the post that did happen is that they did rise. I mean, to be fair, it's been a volatile one this week. It's been up and down a fair bit, but it's up 5%. It's been up 6.8% in the last kind of 5 days. And since it had a bit of a drop off in the last kind of month where everyone started panicking, it has started to flatline again, and maybe we do start seeing the stock start ticking up a little bit from there. But the remarks that he did make in the post was that he did rate it a buy. He did put a $24 price target on the stock, betting on the brand, which $24 is actually a pretty high. You know, that puts it all the way nearly back to where it was in June time when it did hit the nearly the all-time highs there. And yeah, he's big upside. I mean, the upside is quite high from where it currently is right now. So quite a bullish price target that was put on it. Said that Hims is more than just a GLP-1 growth story. Said that it's growing at 40% plus over the 1 billion in revenue without the GLP-1, which we actually did the earnings review and we pointed that out. I think what was it, 44% growth, which is still very impressive. I think a few people have been caught up in all this GPL1 chat that they haven't really focused on the actual brand. You know, even without GLP-1, this is still doing very well. Sees more growth in the personalised products, and also says that there's the volatility around the GLP-1, but it's going to be more positive than negative. So yeah, agree with it all. I think Hims is a good stock, and even without the GLP-1, which it gets talked about for most of the time at the moment, I think that the long-term story for Hims is very good. So very good to just give a bit of backup maybe, and obviously because it's more of an analyst with maybe a better background that he's kind of backing it, is probably a little bit more positive for Hims and Hers. So yeah, that's the video today, guys, updating you on JD Sports and Ehang and Hims and Hers. I'm probably not going to do a video on Saturday. On Sunday, I'm probably going to do more like of an educational video on Sunday, and then Monday we'll get back to some stock market content where I'm hopefully going to do a video on PayPal, as long as nothing goes too crazy. But you know, the stock market can always go a little bit crazy. Apart from that, I'll see you on Sunday. And like I said, if you do want to see some more exclusive content over the weekend while I'm not here, join the Patreon, links in the description, £5 a month. Apart from that, have a great weekend. I'll see you in a bit.